Hey everybody, it's Mike from Orderflows, and welcome to today's video. Today is Tuesday, January 17th, 2023, and it's quite an interesting day. Honestly, we had some reports out of Europe that the ECB may opt for a 25 basis point rate hike in March, following what they're expected to do, a 50 basis point hike in February. And Bunds, the German Bunds, went ballistic on the news. Actually, E-minis also caught a bid as a result of it. And just looking at the normal, this is the bar chart from today, right? 8:30 is right in here. We sort of sold off, and then 9 o'clock we got that spike up, made that new high. Then we sold off from our highs that was like around 35 and a quarter, 35, all the way back down to close to 4,000. Okay, and then then we just sort of traded sideways pretty much the remainder of the session. Right now in the evening session, we did break 4,000. We're trading around 98. 39.98. So let's take a look at some of the interesting things in the order flow. But before I do, if you haven't subscribed to the channel, be sure to subscribe. We're getting up a video pretty much every single day, and be sure to like the video. I like getting the stroke my ego a little bit. All right, so going into the cash open, we're making new highs. All right, and we had just made a new high right after the cash open. Then we see some strong selling coming in. You can see the strong negative deltas. There's this magenta color, which is telling me it's closing quite strong, towards its min delta, which is a bearish signal. But again, cash open, yesterday was a holiday. I like to let the market sort of settle down a bit. And then it sort of pulled back around to this 40.10-ish area, which is, pretty much right around unchanged. Then we did rally back up going into 9 o'clock. Now at 9 o'clock, again, the reports on Bloomberg started coming out that the ECB is hinting at a 25 basis point hike in March. And interestingly enough, the market spiked up. And what was interesting, there was a big size here at 40.20. Let's highlight this price level here. You can see 4,000 traded there. Now, again, this market moved very quickly. You can see how the volume just jumped up. In this case, it was about 7 times as much as the previous, 5, 6, or 7 times more. In markets like 10 years, I mean, it was like 20 times the volume. But you see this big size, when something comes out and you see big size, and when I say something, the report came out, you see a big size, you can't read too much into it at once, okay? Meaning, we don't know what this trade is against. And again, I'm not looking necessarily, since it happened so fast, I'm not necessarily looking for this to be, an order that is going to put a top in the market, right? I mean, for one, we had just been trading around 20. I don't know, maybe somebody took an opportunity to get out of a position that they had been long for a while, because, the market is starting to, it's at a nice price level, especially when you're looking at it now. It's trading, 20 points lower. But, if you're just sort of looking at it, and I just want to talk about this because, I know a lot of people look at a dome, right? I look at a dome. I look at heat maps sometimes. Or the book map, if you will. I use the NinjaTrader one. You see these big sizes coming in, and you expect them. And more often than not, if this was like a normal market condition, right? If the market didn't spike up on the heavy volume on the ECB report, yeah, you'd be looking for it to sell off. But when you see big size like that and the market trades through it, what do you think is taking place? There are big buyers already in the market, because somebody just, people just bought 4,000 contracts, right? And then above it, you got a nice stacked buying imbalance. You shouldn't be looking to get short in here. You got to go with the flow, right? Go with the direction that the market is telling you it's trading in. It doesn't take rocket science to say, okay, there was 4,000 on the offer. And this is where, understanding and reading the order flow differs than other forms of analysis, because a lot of people say, well, there's 4,000 traded there. We should sell off. But you see, 4,000 got taken. And then you see more aggressive buying coming in, stacked buying imbalance. You're making new highs. Okay, maybe there's other time frame traders coming into the market to take it higher. Now, again, I'm an intraday trader, so I'm not looking to hold this, for the rest of the day. I'm happy to get, whatever points I can get out of the move. Then it comes up here, makes this new high at 34. I got some very bearish signals up in here. It hits 34, I've got a delta divergence. So I got a new or equal high. This is an equal high to the previous bar's high at the high of the day. So that's with negative delta, and a strong negative delta at that, minus 1181, over 1,000. That's strong. At their high of the day, you got a big strong negative delta. I've got a stacked selling imbalance, right? I've got an exhaustion print of 2 contracts up here. So I've got a bunch of bearish information, right? I'm looking for this market to sell off. It starts to, right? It breaks below the low of this bar at 29, gets down to 28 and a quarter. Wonderful. Does nothing. Then just sort of goes and hangs around this area of the imbalance. So it's testing this aggressive selling in here because it keeps trading right around there. And again, I'm looking for this aggressive selling to hold over about 4 or 5 bars. Okay. And what I've found, what I used to do with my stacked imbalances, I used to draw it out 5 bars, basically starting at the bar with the imbalance. So it would be 1, 2, 3, 4, 5. And if I'm still trading right around this imbalance by the 5th bar, starting at 1, this is the 5th bar, it's probably not going to work out, right? Because what you're looking for is the move to happen now, not just sort of hang around here for 20, 30, 40 minutes and then sell off, because you're looking for that aggressive selling to continue. And if market keeps trading back into that aggressive selling and isn't really coming off, then it's probably not going to be very effective from a trading standpoint. And what happens? So it's going sideways for 1, 2, 3, 4, 5 bars, 6. And again, if you didn't get out here and then you just started trading back up towards the high, it's not giving you a good sign. All that information there that was bearish, you should have had the move. It didn't happen. And again, taking the order flow to another level is trying to put the pieces together, understand that, hey, there's bearish information. This market should sell off. It's not. It's probably going to keep going sideways, or it's probably going to go higher. And what happens? It just keeps going sideways, and it's just toying with you. Again, the stack selling imbalance, and then it just hangs right around there. Okay, so you've had 2 stack selling imbalances off the high of the day, and the market doesn't really pull off. I mean, this one pulled off from the low of this bar is 29 and a quarter, only pulled down to 7.5, so not even 2 points. Then it comes back up, and boom, lo and behold, it makes a new high. Okay. Now, what was interesting is, you're making these new highs, and you're still seeing a negative delta. Again, you've had negative delta since that high here at minus 1100. You're still getting some decent negative deltas, minus 300, minus 295, minus 243, minus 432. Market's not pulling off. It's like you're up there. You got that aggressive selling. You can just sort of sense that people are taking profits. I don't know if there's the people that scooped up this 4,000 contracts here at 20 are just getting, dumping it out up here around, 10 points higher at 31. Who knows? But then you're just making these little higher highs here, right? It trades, 34 was the high, then it trades up to 4.25, then up to 5.25, but you're still seeing negative deltas. I mean, this high, this green bar's got positive delta, but everything else around it is negative, 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 negative. You still feel like this market is getting ready to sell off. It's just, is it really going to sell off or not? I mean, it should have sold off here. Then you start hanging around. Now you're starting to get, another stack selling imbalance. Okay. It trades back into it on the second bar. Okay. Got some positive deltas in this bar, and then another stack selling imbalance, this time coming in a little bit lower. Okay. So now I'm still hanging around with some nice negative deltas, minus 1,500, minus 1,000. So since that high has been made here, this new high at 924, you got 1 bar with positive delta, 2 other bars with positive delta, but this is a red candle with positive delta, which is actually bearish. But everything else is negative. And it's not just like negative in the sense of, here's minus 44, but it's minus 400, minus 200, minus 500, minus 800, minus 1,500. This is your clue already by the time you get to this bar. Hey, you know what? Yeah, I should short it. Then it starts selling off a little bit, back down towards the 20 area. Now, what was interesting, because you remember you had that big volume here at 20. So you're kind of wondering what's going to happen if we hit 20. Previous resistance should become support. And there was some decent size there, 1,000, 59, 1,300, and it got through it like butter. Lips like butter. And it just traded all the way down to 11. But really, the signs were up here that this market was weak. You're just hanging around the high with some strong negative deltas. Now you're seeing the aggressive selling coming in. And then it's going to come down. Your target is obviously going to be 20, but if you could get past 20, it might drop further. I wasn't looking for a 10-point move, maybe a move down to 15, but it did that, pretty much in the same bar. Once it broke 20, it got down to 15. Didn't quite hit 10. And then it just sort of hung around there. And then, it did go, lower, right? It did get down to, the low of the day was, 4,050, 4,000 00 or 000 spot 50. And actually, it did rally back up towards the 20-ish area. Not, around 1 o'clock, I think it got back up there. But by that time it got back up there, it was ancient history already. You're not seeing any of that size that you saw earlier on the way up or on the way down. Now, really quick, take a look at Bunds, right? When this was that 9 o'clock, right? When the when the report hit Bloomberg. And you can see how the volume just jumped up. It was 4,000. Here it's you're averaging generally around 1,100. Then boom, 29,000. What was interesting again, it's one of those trades where, okay, so our high, we're making new highs here, 805, divergence. Okay, then you get over here, 848, a new high, divergence. 853, a new high, divergence. So you within an hour, you've had 3 divergences, 2 of which have failed. So what are you thinking? Okay, if we could break, the high is 48. If we could break 49, 50, you just drop a buy stop in there because you've already broken 2 highs with divergences. Look for the third one. Go with the momentum of the market. And the market just sort of hangs around, and then it just shoots all the way up from 50 all the way up to 139 even. But again, it's nice to say, yeah, you could have got all that move. But, realistically, most people, like myself included, we trade using an ATM. So even, we have a buy stop here, we get filled, we automatically, our take profit is dropped in there by the system. And in this case, you would have got filled wherever, probably, I don't know, 55 maybe a little bit higher. And then your take profit would have been dropped in, 20 ticks higher, and you'd be filled instantly. It's one thing to say, oh, that was a beautiful move, but realistically, if you're using an ATM, it move happens so fast, you're going to get filled on it in a blink of an eye. So, I don't know. Today it was interesting because there was, that report that came out, but, whenever you see size in the market, try and play a little bit, use your computer, the one that's on your shoulders, your brain, to try and put together what's happening, okay? Because honestly, when that move happened, this bar happened, it happened really quick. But you could look at that and see, there's a big seller there, okay? But don't just look at it, well, there was a big seller there. Look at it from the opposite side. Somebody bought that, and they bought it instantly. All right, they saw it and they just scooped it up. That's bullish information. That's one of the reasons, you want to look at the order flow, whether you're looking at a heat map or, a book map or a dome, seeing that size go through, it means something, right? And it doesn't just mean that, yeah, I had a big seller there at 20. Order flow sucks because there was a big seller there at 20. Market should have sold off. No, you got to look at it from the other side. Yeah, there was a big seller there and somebody scooped it all up. And now the market's trading much higher. It's probably bullish, right? Because not only did someone just buy, you had a big seller there, someone just bought it and they're buying everything else in the market. And that when, someone just comes in and bullies their way through the market, buys everything, chances are it's going to go higher, which it did. Then when you're sort of hanging around the high and you're just seeing negative deltas, you're seeing aggressive selling come in, it's probably a good opportunity to get short, but you're looking for the move to happen sooner rather than later. Like if you're getting short here, I think this is a good opportunity to get short, but it just went sideways. Okay, another potential opportunity to get short, and it's going sideways. Okay, you got to recognize that the market's going sideways. Then when you see, another opportunity to get short, you know, in here with all this negative delta right off the highs, the imbalances, is the move happening, right? You get short, okay? You just took a short here. Maybe you lost a point, took a short here. Maybe you lost another point. Again, these are not, you know, you're not going to be getting short here and having to stop way up here. You should recognize that the market is going sideways. You have to, right? If you can't recognize that, you probably shouldn't be trading. And then finally you get short again, and then the move happens, right? That's the move that you're looking for. This is the move you were looking for earlier. Okay, you lost a point here, you lost a point there. Now you got 10 points out of this move. So if you guys appreciate this videos, you know, I mean, again, you know, I do this sort of to help me collect my thoughts and, you know, talk about the interesting things that happen in the order flow. So be sure to, you know, hit the like button and subscribe to the channel. So thanks everyone. I'll catch you guys on the next video. Bye-bye.